All right, thank you everybody for coming to this news conference on tax increases. The first tax I want to discuss in this discussion is the stealth tax. We all saw the news this morning that we've hit yet another record, 9.1% inflation. Today's new data shows the consumer price index remaining at a painful 40-year high, jumping to 9.1% for June from 8.6% in May, which was a record in May. And this chart basically shows that. There's a couple of points I want to make about this chart. When President Biden took office, the inflation rate was 1.7%, or the CPI, I think it was 1.7%. Look where it's, and for the 4 years previous to that, it was in that zone. Look where it's gone now. And the president continues to try to give reasons for this, even using Russia. But the little data on the right there shows that the Russian invasion took place at around 7 or 8%. And it's been going up since. Economic conditions generally for Americans have deteriorated significantly. Inflation-adjusted wages of workers are falling. Consumer and business confidence has cratered. Nest eggs of retirees and workers are eroding from a double whammy of inflation and lower retirement account values. And the odds of recession have been rising, and stagflation is an imminent threat. Nonetheless, in the face of all of this, the Democrats want to raise taxes, including on the middle class, as we will show in a minute, and taxpayers earning far less than $400,000. The Biden administration proposed $2.5 trillion in tax hikes in its Green Book. Last year's House-passed Build Back Better Act was more than $1.5 trillion of new taxes. Now, my Senate colleagues are talking about a so-called slimmed-down package of tax hikes in the realm of $1 to $1.5 trillion. There is nothing slim about these tax hikes. Tax increases would make inflation worse by further suppressing the supply side of the economy, including by depressing investment and productivity growth, as well as labor supply when the labor force participation remains below pre-pandemic levels. At a time when families are already paying an extra $5,200 per year or more for inflation, the Democrats' tax proposals would raise the cost of goods even further. One of the tax increases being considered in the resurrected Build Back Better bill is an expanded net investment income tax, or NIIT, the so-called, keep that up here for just, oh, no, yeah, I want this chart. The NIIT, known as the tax on flow-through businesses, which are businesses whose owners' incomes flow through to their personal tax forms. Small business groups estimate to be up to millions of small and family-owned businesses would be at risk of having their rates increased under this policy, which will negatively impact their growth. An expanded NIT will drive down small business investment, drive down employment, and reduce small business hiring, lower wages in small business communities, and increase prices, which are then passed on to consumers. Hitting those businesses with a massive new tax hike on the order of $252 billion will hurt the very people the Democrats say they champion, workers and those with incomes well below $400,000. Small businesses are struggling in the Biden economy. It's not time to levy a $252 billion new tax, especially on small and medium-sized businesses trying to recover from the COVID-19 pandemic, the massive inflation, and worker shortages. In addition, now let's go to the next chart. A new analysis from the Joint Tax Committee confirms that Democrats' new reported proposals will increase taxes on all Americans. This chart, if you can't read it, goes from 0 or 10,000 and below up to 200,000 in different income cohorts used by the IRS. And it shows that every single income cohort will get a tax increase. Over the course of the 10-year budget, the JCT says that roughly 30% of the revenue raised for spending offsets and deficit reduction will come from Americans earning under $400,000 per year. Under the proposal, the average tax rate for every single income category would increase. If the Democrats' tax reform is enacted this year, more than a quarter of Americans earning between $75,000 and $100,000 will see a tax increase next year, as will more than half of Americans earning between $100,000 and $200,000. As the economy faces runaway inflation, a first quarter decline in GDP, and increasing and uncomfortable odds of a recession and stagflation, raising taxes and killing jobs as we face prospects of recession makes no sense. Senator Grassley?
Well, I want to report to you what I'm hearing on this subject from Iowans. I was in 17 of our 99 counties over the recent break, and it's not a whole lot different than what I heard in the rest earlier this year. But by far the biggest concern that I'm hearing is the increased cost of energy, groceries, and particularly from farmers, how the energy programs of this administration are raising farming costs. Iowans are paying, this is a new figure, $670 more per month on living expenses since President Biden took office. They're pleading for a reprieve from the Democrats' terrible economic policies. All President Biden and Democrats have offered them are false assurances, more reckless spending, and you just heard about the damaging tax hikes on more than just the people over 400,000. More government spending and higher taxes are exactly the opposite of what Iowans need right now. Reckless government spending fueling inflation in the first place. More spending will make it even worse. Their proposed tax hikes would further squeeze a middle class that's enduring hurt the most by inflation. Democrats' tax hikes on job creators, like this pass-through income that you just heard about from Senator Crapo, would inflict further damage by suppressing business investment and lowering productivity. To combat inflation, we need more production, not less, and you get less production if you don't have more investment. Democrats have had their way for 18 months, and it hasn't worked. It's time to stop the reckless spending and work towards common sense, bipartisan solutions.
Senator Cornyn?
There's an old expression that when you find yourself in a hole, quit digging. But that just seems like what the Biden administration continues to do, continues to dig the hole deeper and deeper and deeper. And there's no subject that hits closer to home than the cost of gasoline and fuel for your vehicle. This is where inflation has perhaps demonstrated its the pain, the silent tax you heard about to most people most directly. And you would think that the Biden administration would understand the basic laws of supply and demand. The one reason why prices are high is because demand is high. But when demand's high, if you want to lower the price, you increase the supply. And unfortunately, because of the ideologically driven energy agenda by this White House, rather than have domestic producers in places like Texas and elsewhere produce more oil and gas here in America, President Biden is doing really the unthinkable. He's going to talk to Mohammed bin Salman in Saudi Arabia about Saudi Arabia increasing its energy production. Obviously, this is upside down. We could create more good jobs across America and bring down the price of gasoline at the pump and provide some real relief to American consumers if we would just produce more energy here at home.
Senator Young.
I know the Biden administration has been short on answers about how to provide relief to our businesses, to American families, as We see inflation manifesting itself in countless ways, big and small. Back in Indiana, I'll tell you, people can talk about very little as it relates to their lives and public policy when I interact with them, aside from the price of utilities and gas and housing and groceries. This is one of the painful things about inflation, is when you find yourself in an inflationary environment, it's very difficult to get yourself out of it. And we could have avoided this predicament. It's something I've discussed through members of the media a number of times in the past. We could have avoided a situation where we injected $1.7 trillion into a rapidly growing economy that counters any conventional economic wisdom that we've learned over the years. But nonetheless, here we are. So we need to find a way out of this mess. And this is perhaps a news alert to the Biden administration, but probably to no one else here or around the country. Tax increases aren't going to provide relief to our businesses. They're not going to provide relief to rank-and-file Hoosier families. We certainly can do better than this. Look, inflation is already forcing the average U.S. household to spend an extra $5,200 this year. $5,200. Now, I know this probably is not a lot of money to, certain people who populate the White House. Might not be a lot of money to some of the people in this room, but $5,200 is a lot of money to the average American household. I know back in Indiana, $5,200 can make or break an administration. It can make or break a presidency. So this president needs to figure out that he's headed the wrong direction with these proposed tax increases. Senator Schumer and Senate Democrats would be wise to heed this as well as they consider this reconciliation package that they continue to advance. This is basically repurposed Build Back Better for the uninitiated. And let's work together on some bipartisan solutions. We have national security challenges. We have a problem at our southern border. There is some common ground to be found with respect to certain issues related to our economy, the need to reskill our workforce. Let's work on all of those things. And the Biden administration should know this. I don't anticipate them changing their agenda. So we'll be carrying this agenda to the American people come November. And they'll be able to register their opinion about the extent to which Democrats wisely handled our inflation challenges. I think they will register their opinion that even the consideration of a massive tax hike on rank-and-file Americans in this atmosphere is ill-advised and certainly not in the best interest of our long-term economic health.
Senator Portman.
Thank you. I appreciate Senator Crapo for having this meeting today. Look, this is the most punitive tax of all. We just got the numbers this morning from Ohio, $8,300 a year in additional spending on energy, on food, utility bills generally, on clothing. $8,300 a year. That's based on our numbers that we have in Ohio on January till now in terms of inflation and extrapolating that out for the rest of the year. That's impossible for people to handle if they're on a fixed income. A lot of lower middle income folks in Ohio are suffering the worst, some of whom have long commutes. I'm hearing from them. I was home over the break to talk about other issues, but pretty much everybody got around to inflation, no matter what the other topic was that we talked about. And this is something that, unfortunately, is going to get worse, not better, unless we change policies. So we have the worst inflation in 40 years. We've got this 1.3% last month. By the way, when you extrapolate that over the next year, that's 16.8%. I mean, that's just unimaginable, even higher than the Carter years. So what do we do? Well, I think Senator Cornyn said it well. You know, we've got to deal with the supply side. Demand reduction is not where we want to go with higher and higher interest rates. Some of that's necessary at this point, I suppose. What we want to do is help on the supply side of the economy, including producing more fossil fuels here in this country and all forms of energy in order for us to see the price go down at the pump and the utility bills go down. We want to see regulatory relief and certainly not tax hikes, but rather more pro-growth policies as we had before the pandemic. Remember, during that time period, we had low inflation and we had a strong and growing economy. We had 3% wage growth every month, at least, for the 19 months prior to the pandemic. Now we see just the opposite. Wages are growing, but not nearly as fast as inflation. So everybody's feeling like they're losing ground. And what the Democrats' answer is, instead of helping on the supply side, doing things that are counterinflationary, is they're proposing things that are going to make it worse. This chart is an example of that. And by the way, it does hit people well under $400,000 a year. But the bigger point is that it's pro-inflation. Because when you tell a pass-through company, which is 99% of the small businesses in Ohio and around the country, you're going to have to pay more in taxes, where does it come from? Well, a lot of that gets passed along to the consumer. Some of it comes out of workers' wages. But all of that is going to add to inflation. So this is exactly the wrong way to go. I'm a pass-through owner. A lot of my colleagues are. I grew up in a pass-through company. We used to get a dividend for one reason only, that's to pay taxes. The rest got reinvested in the company. And yet it all showed up on the individual income tax form because it passes through to you. So I think a lot of Democrats maybe don't realize that's how these companies work. And when you're saying you're going to put taxes on the person who has that income reflected in their individual income tax rate, they take that often out of the company. And or, again, pass this along to the consumers and to the employees. So my hope is that the Democrats will see that this is the wrong way to go. Don't add more stimulus spending. That's one thing they're talking about. Don't tax America's small businesses. That's pro-inflationary. Instead, do what we did before the pandemic that was working for everybody, particularly for lower and middle income workers. They were the ones who benefited the most from that growing economy and rising wages. If we do that, we'll begin to get out from under this unbelievable inflation that we're now facing and begin to get the country back on track.
Senator Lankford.
This past weekend, I was sitting in my living room for a moment, and I was going through a box that my mom had actually packed more than almost 50 years ago, I guess now. I was going through this box, and in this box she had random items that were in it, and one of them was a newspaper, actually from the late 1970s. So as I'm going through this box of some things are 60 years old and some things 50 years old, I rented this one that's just over 40 years old. And as I pull out this newspaper, I started just flipping through it to be able to see what were the stories at that time. And one of the stories there was about Jimmy Carter meeting with the Saudis to talk about them increasing oil production to try to bring down the price of oil and increase access in the United States. And as I read that story, all I could think is, history is repeating itself. Literally on the weekend before, I'm watching Joe Biden travel to Saudi Arabia to go meet with them about increasing oil production and to try to bring down prices in America. I'm reading a story of Jimmy Carter doing the exact same thing in the 1970s. This is the Biden economy. This economy that we have right now of 9.1% inflation is directly tied to the Democrat policies and the things that they have passed in the past year that have dramatically increased the prices on Americans. While they talk about their benevolence, they're going to go help everyone, they're actually pushing prices up on everyone right now, and we continue to deal with energy issues now, just like we did during the Carter administration then. These are policy decisions that have been made that are affecting people in my neighborhood, in my state, in my county, in the cities in my state. The newest estimate for Oklahoma is each family is paying $7,198 more this year for the exact same products they were buying last year. $7,198. Wages have not gone up for families in my state, $7,198. They're falling farther and farther behind directly because of the policies that have been put in place by this administration. And now to answer that, This administration saying our solution to inflation is going to be increased taxes, but their confidence is, well, we're only going to increase it on some Americans. Listen, if you're a business and you're dealing with 9% inflation, and then you're also tacked on a, let's say, a 3.8% tax, where does that go? It goes to higher prices, and it literally drives the inflation even higher. So their quote-unquote solution for inflation of raising taxes is actually going to increase prices once again. They're literally working to make a bad situation worse. We've got to get them to stop the federal spending and stop proposing raising all these new taxes on it to try to get a handle on what's happening on inflation, because it's literally choking out the people in my state as they fall farther and farther behind. And the bad news of this, if there can be one that makes it even worse, is that I was at this same podium months ago and was talking about inflation in America, how much higher it is than most of the rest of the world. That's not true anymore. Because of the United States inflation and what's happening here, now we're seeing prices go up around the world as well. That's catching up. So what the Biden policies have done and what my Democratic colleagues have done here in the United States is not just hurting Oklahoma consumers and American consumers. It is now a worldwide issue that we're dealing with as well. We have got to turn this around.
Thank you. I think my colleagues have said it best. This administration needs to stop its effort to cram down yet again another new round of taxes and spending, period. We have time for a couple of questions before we have to go. Yes, we'll go here and then here.
So what is your response to President Biden's statement today, noting that the core inflation numbers have come down and that these numbers are outdated given the recent drop in gas prices?
Well, first of all, look at the chart. The chart tells it all. He said that same thing when I put this similar chart up months ago. It hasn't changed. Yeah, there's been a small tick down in the gas prices, but they are still the major driving force here, and they're still above $5 a gallon. I think the answer is the president needs to stop looking for excuses and start focusing on the right kinds of policies that my colleagues have described here in terms of fixing and addressing the inflation crisis. Yes.
So there's reports that the Biden administration is considering rolling back the tariffs on China. Do you think that that's the right approach to handle the situation?
You know, that's one that I am continuing to negotiate with the Democrats, and I'm not going to weigh in on any specific outcome of those negotiations right now, but I'd be glad to, if any of my colleagues want to jump in on that. This is a heavy item of negotiation right now between the parties.
Yeah, and I appreciate the fact that Senator Crapo was in the middle of that because it is very complicated. But the bottom line is there was a report called a Section 301 report that was done on China's practices with regard to trade, and it was determined that China was not playing by the rules, was subsidizing with dumping and other unfair trade practices, and therefore these tariffs were put on. China has not changed its behavior. And in fact, the Phase 1 agreement that was negotiated between the previous administration and China has not been fully implemented as a result. So my concern is that we don't want to send the message to China and frankly to other countries around the world that when countries are found to be unfairly trading, there's not going to be a consequence. And when they make a commitment to do something, as they did in Phase 1, and don't complete it, that we should not reward that. So my hope is that we don't do a wholesale elimination of the tariffs, but rather look at it on a case-by-case basis, which we did during the last administration and do not do in this administration, which is to have what's called an exclusion process, where, as an example, if the product being imported from China is not otherwise made here in the United States, that might be a good candidate for reduction or even elimination of that tariff because it's not helping American workers. But on other products, where there's direct competition with American workers and where it's being unfairly traded, that's not a level playing field for American workers. I think we have to be very careful there. Also, I've looked at the impact on inflation that it would have, and it's minimal. It's minimal. Having said that, again, I appreciate the fact that Senator Crapo is in the mix there. I know he understands all these issues, and we need to come up with a good balance.
I'll just make a quick comment on that as well. It's ironic. The Biden administration says we're struggling to be able to produce enough oil, and so let's go to Saudi Arabia and get more oil. We're slowing down on manufacturing, and so let's go to China to get more manufacturing. there's any lesson that we should have learned during the time of COVID, is that we cannot be dependent on the Communist Chinese government on our supply chain. And this president that repeats over and over again, let's do made in America, is now trying to be able to deal with the inflation problem that he has caused and his policies have caused by going to China to be able to make us even more dependent on China long term. We need to have a policy that does work towards making things in America, that deals with the regulations that he doesn't want to reduce, that deals with the production issues that he doesn't want to deal with. He should make it easier to produce in America, not easier to be able to actually go get from China. That's a better long-term solution for us. So he's trying to solve a real problem that he's created by creating an even bigger problem for the United States long-term, running back to China to be able to resolve this problem now. So let's resolve it by dealing with the regulations here and ask the simple question: why are we going to China to get something done when we should be actually asking the question, why can't we do it here? Let's deal with the regulations that would actually resolve it here.
Any other questions? Yes.
Hey, I just wanted to add on to this, because you guys talked about how inflation's hit your communities. Is this the number one thing that you guys think people are taking to the polls to vote on in the midterm?
I can speak for Idaho, and the answer is yes. It's their number one issue by far. And in fact, if you look at the number 2, 3, and 4 issues, they all connect and relate. The people of this country understand how an economy works, and they understand why this economy is in an inflationary spiral upward, and they want us to address it with the kinds of reasonable solutions that Senator Portman just went through. They want us to address the supply side. They want us to address the overregulation. They want us to stop throwing gas on the fire. And, maybe you should talk about Ohio, but in Idaho, the answer to your question is yes, this is number one.
Yeah, I think it's a great answer. I mean, people are smart. They get it, and they understand that this was as a result of some policy changes that were made, in addition to, on the supply side, the obvious issue of COVID. But we knew that going into, the post-COVID, intense COVID period. And instead, we did just the opposite of what we should have been doing in terms of increasing supply. So adding more regulations, threatening to add more taxes, and sending a strong message to our energy sector that we were going to stifle production in this country, as we're now starting to look overseas for production, which is interesting because, by shutting down Keystone on day one, billions of dollars of investment, by saying we're not going to approve new leases on federal lands or water, by saying that we're going to restrict permitting, including through the waters of the U.S. regulations. These were all things that were done by the administration. And by the way, consistent with the campaign, where they said we're going to do all we can to discourage the production of fossil fuels. All these things add up. People get that, and they see it, and they see the result at the gas pump, and they see that that's what they find at the stores. And when they're trying to figure out how to make ends meet at the end of every month, people are just in shock by these increased costs. Particularly, as I said, the middle and lower income Americans who I represent, who don't have any buffer in the budget. Like, that's it. There's not a couple $100 lying around, much less $8,300 a year. People on fixed income, seniors, they're really having a tough time. One thing that hasn't been mentioned today that I think should be is that this started really with an overstimulation of the economy. It was, as Senator Crapo just said, putting fuel on the fire. And this was in March of last year, so 15, 16 months ago. And at the time, a number of us said, look, the outside analysts and the Congressional Budget Office, which is nonpartisan here in Congress, are all saying the same thing, which is this economy's taken off on its own. In fact, CBO said that by June 30th, mid-year, we'd be back to a pre-pandemic economic growth level. So the economy was already improving. And we warned that if you do this massive amount of spending, $1.9 trillion, most of which had nothing to do with COVID, the biggest spending bill by far Congress ever passed, more stimulus than ever, that you're going to overheat the economy and risk increasing inflation. It wasn't just us. It was also famously Larry Summers, former Treasury Secretary, and other Democrats who were looking at this objectively and saying, from an economic point of view, this doesn't make sense. There was an alternative. You may remember that a bunch of us went down to the White House, Republicans, 10 to be precise, which is enough with 50 Democrats to have passed something and said, here's our proposal. Let's focus this just on the issue at hand, which is COVID, shrink this down substantially and not make it a stimulus package. we were rejected. In fact, the day after our meeting was the day that Senator Schumer made an announcement that they were going to do the $1.9 trillion under reconciliation, where they needed 0 Republican support. So I will say, you know, when you look back over time and how we got to where we are, we have to acknowledge the fact that this was a deliberate policy decision that was made, and it's resulted in these numbers that are just overwhelming for the people I represent.
On that same thing, some Democrats are talking about a need for potential more COVID stimulus specifically, whether that's to increase vaccines, anything. If the administration asks for that, do you think there's anybody on your side of the aisle that would approve or would be in support of more money for COVID relief at this point?
Is this like
Yep.
Yeah, the answer is yeah. I'm not a part of that group, but maybe are you working with?
I mean, there was a proposal, as you know, put out by a bipartisan group, including Senator Romney representing Republicans, saying we can pay for it out of the ARPA funding, the American Rescue Plan funding. I mean, every town and city in America is making announcements recently about how they're using their ARPA funds. I challenge you to do a story on it because you'll find that very little of it has anything to do with COVID. I mean, it's fine projects. It's a new city park, or it's, you know, it's something that has to do with infrastructure, which we've funded generously now through the infrastructure bill. But there's just a lot of money that was put out that could be repurposed for this. And there was an agreement, you recall, between Senator Romney and I believe it was Senator Schumer. Anyway, there's an issue right now as to new money, but not as to repurposing existing funds, and there's extra funding out there. So I think that's where you could see a bipartisan compromise.
And Rob reminds me of a couple of points I want to make. One is this discussion that has been going on, and there has been a discussion about that need. It's a much smaller discussion, COVID-related, and it is offset. It is not new spending. And that kind of discussion is something worthwhile. If there are things needed on COVID that need to be done. Rob correctly pointed out the fact that there are hundreds of billions of dollars of that 1.9 trillion that have not yet been spent out, and that we are trying to find ways to get that redirected or clawed back so that we can stop this overstimulation. The other point I want to make, and just remake, is this chart is not that old $1.9 trillion bill. This is the new proposal to pile on top of what we've just been talking about, and this is taxes only. There will be spending matching this. Now, Senator Manchin has said maybe the spending will only be half of this, but the point is there's another huge hundreds of billions of dollars of spending being proposed in the cram down that Senator Schumer is currently pursuing, which is not just the taxes. Today's discussion in this news conference is focused on taxes, but matching this is another huge mistake in terms of piling more subsidy spending and more debt finance spending into the United States economy.